Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
Hello everyone, it is Polar here, the CMO of Seasonal Tokens. Welcome on another episode of the Seasonal Tokens podcast. And today we have another special guest. We have Mr. Key. He is a chairman and co-founder of Key Difference Media, the biggest and largest ICO incubator. And he's also the co-founder of Forward Protocol, which provides blockchain toolkits that connect the value-driven economy. So welcome, Mr. Key.
Hey, I'm very happy to be here. Thank you for the invite.
Thank you very much for accepting my invitation. There are a lot of great things that we are going to talk about today. And I think that you have an amazing story that you can share with our listeners. But let's start with the first question, which is like, can you introduce yourself and your background with a few words?
Sure thing. So I entered blockchain space in 2013, 9 years ago, and have seen all the different trends in the space. I got in because many of our clients back in those days wanted to enter and use Bitcoin for their payments and start integrating blockchain for their different business needs. And that opened my eyes to this whole new potential. And it was a beautiful time. Businesses were building with a great revenue model and self-sustaining, etc. And fast forward from there, in 2017, our company Key Difference Media helped launch over hundreds of projects, raised over $550 million for them. And we continued expanding, running marketing campaigns for entities like Ledger, Nexo, BitGo, eToro, and so on. I've been leading multiple media companies and incubating them and etc. We started Forward Protocol because we saw there was a big gap in the market. All these companies were developing something amazing, but they were not able to bring adoption and users. So Forward came to life to make sure that a common man can also use blockchain and use it for their businesses without having to be a developer. So been in the space for this while, a lot of lessons have been learned and a lot of experience has been gained, which I'm very happy to share with the members of community today.
Perfect. Yeah, it's really great to have one of the oldest Bitcoin investors on our podcast, if I can name it like that. In your bio, you are mentioning something very interesting, which is that you have started your entrepreneurship journey at 14. So can you share more about that?
Sure thing. So I was in my 10th grade and I was not keen on what I was learning there. I felt it was limiting and it was not stimulating enough. I had a curiosity to explore so many things. So from my 7th grade, I've been learning programming because from the time I got computer, I want to know how it works, what's behind it, how something functions. And with all that interest and the learning that I had progress, at the age of 14, I quit my education. Even though I got a scholarship for my higher education, I decided to pursue business. I decided to start something on my own. From that point, I've been developing websites and many more, and that was the first entry point for me in the world of business. But right after that, I soon realized that apart from developing those things, my real passion was in the way I could speak about it, where the way I could convey the message, market it, the narrative, the story, and getting people from across the world interested in what is there. And that's when I realized the potential with marketing, and Key Difference Media was born. And it's 16 years old right now, and that started everything from zero to the empire that we have built over these years.
Really nice. And your parents have been okay with your decision?
They were actually supportive, yes. Initially, because the first time when I didn't like education, there's nothing that someone can force. So they were open to it because they have seen who I am and what I have done in the past. The space was needed there to explore, to try something. So they did give that space of freedom to play around. Of course, the society doesn't like it. People around do not like it. But my parents were supportive to protect and ensure that the interest or the vision that a 14-year boy had shouldn't be thrown out of the window without even checking it out.
Wow. I think that a lot of people will be jealous of what you're saying. I think that these days, it's more and more important for parents, their kids to finish his or her education, and after that to start chasing his or her career. So I'm really happy for you that you have had such supportive parents.
I'm very happy as well for that.
Yeah. Otherwise, maybe we wouldn't have met today. It sounds like everything has started really well for you, and then you have jumped into Web3. But what has actually made you to move to mainly Web3? Is it only the clients that have switched from Web2 to Web3?
That was the initiation point because they moved, and as a content marketer, I had to understand and speak about it. So it was inevitable for me to get there. But the moment I got there, something changed. I was looking at a world and I was looking at a possibility which was so in line with how I saw things work. I quit education because I didn't like the way they forced things or which was not of interest or things that I believe was wrong or things that were outdated. I was when I started my business at the age of 14, I couldn't set up a company because government said that a guy who is 14 years old cannot run his own company. I couldn't open a bank account. I couldn't do anything. So having seen the challenges that comes from centralized entities, from societies around us, from people who are judgmental in every way, looking at all of that, I always preferred for something to be the way what blockchain represents, the decentralized nature of where anybody can be on the equal level playing field, where anybody can gain the same opportunity that the other could and progress with their visions. It's a matter of skill. It's a matter of passion, talent that a person has, and it shouldn't be bottled up because some entity believes otherwise. That choice has to always be in the hands of the user or the person. And when I looked at what Bitcoin was doing there and how the blockchain as an infrastructure could work. Of course, in those days, it was not big. I don't think anybody ever saw the full scope of what it could land into today, but we could still see the seeds of possibilities. And that was inspiring. And we wanted to be part of that. I wanted to support that. And it made perfect sense. And from a marketing standpoint, that was a very small industry. There were no competition. And being one of the earliest, it made a lot more sense for us to establish ourselves strongly in that tight niche sector and grow in it. And that's what we did.
Nice. Yeah, you definitely sound like a very passionate person that is in the Web3 space. And I totally agree with you when you were saying that crypto is giving everyone the opportunity to do whatever they want without a lot of the limitations that Web2 is giving, and also not only Web2 but the whole life, the whole society, like you just said. And you have started in 2013, and now it is 2022. So, what do you think about the current space of crypto?
It's a very good question because when we started out between 2013 to 2017, every company that was existing, when I say every, let's say 90, 98 or 95% of the companies that were existing, they all were revenue generating. They were revenue positive because an existing business who used Bitcoin as a business for testing blockchain because they were keen at seeing what they could do there. But in any instances, the companies were mostly self-funded. They were not using investors' money to run. There were payment processors and businesses which were actually having profitability coming from there. And that was beautiful to see because that was real business, but ICO and everything else that followed, things changed. People saw that it was an easy access to money and it became a speculative game. Of course, people were speculating with Bitcoin even back in those days, but they were only speculating with one Bitcoin and probably a couple more. But at this point in 2017, everything focused on just money. You raise money, you go ahead and trade it, play with it, but they completely forgot the foundation of it. They didn't even have the concept of having a utility much later on, and that was a major challenge. The as any new industry grows, when there's an influx of money, mistakes happen, but those mistakes were not properly fixed. In after 2018 and 19, when the next bull run came, people went ahead with one small improvement, like but they didn't fix the whole problem. They fixed a small the way something appears. They just said, now you have staking as a utility and nothing more. And they didn't improvise the quality. They didn't bring in business models. They didn't bring in a proper structure that is required for something to work. And when I say proper structure, I don't mean regulation. While it's arguable one whether regulation is good or bad, it has its pros and cons. I believe that business structure is more important. If you're creating something and you don't have a possibility of getting clients, you don't have a possibility of making revenue out of it, you don't have a structure to grow it as in protocol or company or team, then the point of just creating something and raising money and partying with it. So right now, the state of crypto, in one way, it is extremely bad because most of the members who have been in the space for long, they are no longer keen at what's happening here with the monkey pictures and the pure speculation, low quality creation of assets by various other even larger companies. Because when big brands are coming in, they are creating again useless picture-based NFTs, not really a product that is connected to their line of business. And all of that is very sad. But what has been happening in the last 1 week, I believe, is actually having a positive effect for one specific reason. People are seeing that there is a great problem with centralization, even with regulation in place. People are able to notice that non-custodianship, the decentralization is the way to go, because those platforms actually can live. Those platforms are able to manage and sustain the onus, the responsibility of maintaining their asset lies with the user. And that is a beautiful example that the blockchain shown in the recent days. And I think that shift is good, but when the result of the shift will appear is going to be probably another 2 years from now. So we need to wait and watch. But the current state is definitely sad.
Yeah, but like you said, at the same time, there's some positive things happening, like some sort of a mindset change is also happening. So in the end, I suppose, and I hope that the crypto world will become stronger, and projects will see that it is far more important to build products than just nice designed pictures or something like that, and that marketing, and that marketing should be considered very seriously and not to focus that much on hype, but on value providing.
That's very true. And I think the transition is already happening. And I think that the transition is already happening right now, and it'll increase as the day progresses. And probably in the next 5 years or 3 to 5 years, we would start seeing a much larger majority of the implementation starting to make more sense. Right now, still, it's going to be minority. We can already see a lot of great deployments in conversation, a lot of even live deployments happening as beta or alpha. But it is moving mainstream slowly, and with time, because big businesses or big products or projects don't get built overnight. You don't just jump somewhere and spend overnight to fork something and build something amazing. Anything that you want to build worthwhile takes time, and that time is right now.
Yeah, I 100% agree with you. And there is one serious problem that the crypto industry has, and it is the lack of patience. So everyone wants a great, amazingly secured and delivering product in a week or two or month or two. But like you said, it takes years to build a sustainable product or service, even service sometimes. For example, like neither Coca-Cola or Apple have been built in months. It took them many years to become these big empires that they currently are, right?
Exactly. Value creation is a process. It's not a click of a button.
Yeah, and at the same time, you need feedback from people to slowly develop something better and better. It takes sometimes a lot of feedback before you have a product that is good enough for getting, let's say, more than 10 or 20,000 people to use it.
Yeah, that's the most important part or the problem that you highlighted right now. We don't have those users in the blockchain space. Most of the games have investors. Most of the projects have investors, traders. They don't have users. And then who's going to test? Who's going to give feedback? Even when there's a bug bounty program, the whole point is to get a bounty. And of course, people are doing their job. Sure, you're incentivizing them to find the problems and get paid from it. But the whole focus constantly goes towards some form of reward, and which is not wrong by itself, but if that is the only thing that's happening there, then it's lacking substance. In a traditional world, you launch a product, beta testers come and they find bugs, they report bugs, they're part of the community, not because they're getting anything for free, not because they're getting some tokens or gift cards, but they do it because they want to use the product and they want the product to become better because it matters to them as a user. And you don't have that here. And that will only happen when the Web3 products are more usable, the user experience is simpler, and something that a Web2 user can adopt. It is not going to be the same as using a Web2 platform, but it should be like a Web 2.5. They take few steps forward. The Web3 simplifies by making things a little more easier for them. And we meet in the middle where the large billions of Web2 users can actually enter Web3 world. We speak about bankless people, the those who are untapped by other markets. All of that is great, but we already have so many millions and millions of users with mobile phones and computers and great internet connectivity. Why don't we bring them? Why are we trying to fight to an audience who do not have internet, who do not have computers, and who don't know how to do any of those things? There are much usable, ready to work with audience, and we should focus on that. Users are the key. And when users are there, everything is faster. There's more feedback. You know if something works or doesn't work. You build, you restructure. If something is wrong, you fix and you grow.
Absolutely. You can grow without getting feedback. And the issue that we are currently having, like you said, is that the audience mainly consists of speculators, not people that are invested in the product.
Right.
Let's move the conversation a little bit to the ICOs, because I think that there are a lot of things that we can learn from the past ICOs that you have done with your company. You have been part of many ICOs, and you have seen companies that are succeeding and failing after that. So what do you think makes the difference between these two types of companies?
I think a successful company is a company. It's not a fundraising campaign. And that's all the difference I see. Most of the ICOs, most of these projects, what is the team size? 2 people, 5 people? And what is their work? Marketing members. How many members in that team are actually in the business side? So right now, you do see companies which are more serious. They have developers and they have marketers, but who is running the business? Where is the business in there? And that is the primary differentiator. Of course, that's not only for a company to be blamed, it's also the investors to be blamed as well. When we go and look at what investors are looking for, all that they see is, okay, is there a hype? Is that something that can sell? Can I speculate on it? Do they have bigger exchanges? They look at all of that. They look at partnerships and brands, but they never look at the capability of the team to run a business. And running a business is hard. There are hard choices to be made. Business decisions should be made based on future needs, a long-term needs of 3 years, 5 years, and not just 3 months. And those choices might not necessarily be liked by investors whose only objective is to earn some money in the next few months, but there needs to be patience, like you highlighted. So it's all coming back to the business and implementation. If a project is a success, that success is also a proportional term. What does it mean for something to be successful? Does it just mean it goes 100x, stays there at 50x for a year? Is that a success, or is it is it users actually using something and driving more interest from the rest of the world towards it? I think, to me, the usage, not only within the blockchain space, but also attracting other businesses who are finding solutions from these products for their live use cases in their businesses, that's a success. If a Web2 company comes and says, hey, I like to use this product because it solves my problem XYZ, it makes my business process better, how can I do it? And that is when the success actually starts. And until then, it is all a game. It's a game of speculation. It's a game of building a technology because someone is passionate about building it. But unless someone uses it, it's all worthless, and it's like a penny stock.
Yeah, and it dies very fast. But you're mentioning something very interesting to me, because if I understand you right, it sounds like those investors, they have been looking more for hype-oriented to projects that are user-oriented. Is this what you're saying?
Yes, you could definitely say this, because think about it. Let's go back by a few years. Let's look at 2015, let's talk about 2015, 7 years back, not long back. Just go out and survey how many are investors. Do you find tens and thousands of investors like you find right now? Where did all these investors come from? Right now, someone with $1,000 sitting in their bank account is an investor, which is fine, which is the whole point of blockchain. Now, anybody can invest, everybody can make money, which is all great. But then they need to be also educated. It's about being smart at making those choices. And that is very important. So now you have these investors who are mostly gamblers than investors. What is the difference between a gambler and an investor? An investor studies a product or a business or a market or an opportunity. He uses his logic. He thinks through the possibilities, and then he decides what is the best thing that he should be doing. He has $1,000 with him. Is it best for him to keep the $1,000 with him right now, or should he go ahead and put it in a particular asset because of logic A, logic B, and logic C? He sees what he should be doing it. That is an investor's thought process. But a gambler, he sees two things. He just speculates on putting some money here, some money there, and sees what happens. And if it doesn't, he just takes the money out and puts in something else. That's blind gambling. And most of the people in the space right now are gamblers. And this is not just about individuals. A lot of VC funds are gamblers. A lot of even bigger brands do nothing more than gamble, which is very sad, and which is on one way hurting the blockchain industry, because now if investors, the one who are giving the money, is only focused on that, then a lot of builders will start going towards that direction of creating exactly what they want. What do they want? Scams. They want scams that could pump, scams that could make them money in the next few months and not really care about the business. So now people are incentivized to build scams, which is the worst thing that can happen to an industry at this stage.
Yeah, you're absolutely right. The demand is the reason of the creation. So if there is demand for pump and dump projects, there will be more pump and dump projects. That's absolutely. And you have somehow started answering one of my next question, which is like, how do you think a person can do more investing rather than gambling in crypto?
Okay, that's very simple. Just don't invest. You come into the crypto space or come into any industry, study the space. Study what has happened in the last 5 years, 7 years. Study because investing is a skill. Investing is it's a base of knowledge. It's about knowing certain things. Learn that. They don't have to do it in the crypto space. They can learn it from the stock space. They can learn it from commodity space. They can learn how something happened in 50 years before, because investing has always existed. It's like saying, I know how to breathe, but now I'm in crypto space, I'm going to breathe differently. No, you don't breathe differently. You breathe the same way. You invest the same way. You use the same metrics. Of course, there might be few ways. The process is different. but it doesn't change the fundamental of what it is. They can spend 3 months to learn, 6 months to learn. And once they learn what it is, they can do paper trades. They see a great project. They're fully hyped. They want to jump into it right now. They want to put in the money right now. Well, put that in paper. Take a paper, write that you're investing $200 into this project right now. Follow the project as if you actually invested the $200. Follow through on it. Know what's happening and go through the process and feel it. Know if you feel like you want to sell something or if you want to buy more. Notice your emotions. Notice what is going on in your mind and go ahead and try to see if those active thoughts or those feelings were right. If you do that, you would never FOMO once again. You would never ape in once again. It is important to jump on an opportunity. Every investor knows this. When you find an opportunity, it is very critically important that you grab it, you chase it, and you make it work. But the difference between that and FOMO is the application of the mind to judge an opportunity, judge a risk that is associated with it. Now, if someone comes to me and tells me, okay, hey, this is a great opportunity, you can only put in $200 in it, I wouldn't think twice. That's okay. I mean, it's $200. It's more worth than me spending the next 30 minutes of my time researching it. But if a person has only $500 in his asset base, in his portfolio, and he has to put $200 out of that, he should probably spend good amount of time thinking and understanding it. It depends on what is value and the relative value to time, the relative value to the size of a person's portfolio, and which is exactly the whole point here. Take through the process slowly, understand yourself, understand the market, understand how the industry works. And when you understand all of those things, you're able to connect the dots effectively and then get into invest. It could be 6 months from now, 1 year from now, but who cares? Businesses have existed for hundreds of years. Businesses will exist. New opportunities will come. There will be all of these great trends once again. Business is a cycle, and these opportunities are not going to disappear today and tomorrow. So take it slow, but do it right.
Amazing. I think that this is one of the most extensive explanations of this question. So thank you very much for that. We still have some listeners right now may decide to fast track it and start as soon as possible. So maybe we can also help to them and also to those that are somehow prepared but still need some guidance. So what do you think, based on your experience and being part of that many ICOs, are the characteristics of a company or a project that is worth investing?
Okay. Just check their actual experience. If someone says that they are building a particular business, see if they or someone in their business has that background in that space. Don't just look at their advisors. You can go hire an advisor at a low cost or by giving them some token deals. But just because someone is an advisor doesn't mean it is as good as a full-time member in the team or a founder doing it. So look for the actual team members who are qualified in running it. Look for their historical success or a pattern towards it. Do the study, do the hard work. Investing is a full-time job. Investing is hard work. It is just not putting the money. That's the last part. It's like signing something off, but then there's a lot of work that goes before it. So go ahead, do those things. If you were to run a business, what would it take for you to do it? The right questions are the key to successful investing. So when I'm investing in a project, I would go ahead and put myself in the shoe of that founder. Okay, I am right now starting this particular project. What do I need? Who do I need? How do I make this work? How can I come up with the sufficient resources to make this a success? And then see if all of those things exist there. It's a common sense. It's not a magic. It's not a secret sauce. It's pure common sense. If you want to build something, you need the team, you need the money, you need the way to communicate that, and you need the skills and commitment. So just look at that. If you see that the person's history doesn't show signs of commitment, that's a problem. If you see that the tokenomics is structured in weird ways, then that's a red alert. Just make sure you look at all of those things and make your choice. There's no one thing to look for, because that's the biggest lesson I learned from all these product launches and launching all these companies. One thing can kill a company, but only one thing that can make a company successful doesn't exist. You need everything for a company to be successful, but one thing wrong is sufficient to kill it. Just think about it like a wheel on a cart or a car. If a portion of the wheel is missing, then the car is going to go and go to a side and going to fall off from somewhere. But if you only had one part of the wheel, it doesn't go anywhere, right? So the bigger question is, what is that one thing that's missing that can kill a project that I'm investing into, rather than what is the one thing that it should have for it to work?
You're absolutely right about that. Investing in project a lot harder than what people expect. In most of the cases, investors are pretty lazy and they base their decisions on the marketing that the project is doing, on what they have heard about it, on what influencers are talking about the project, which, like you said, is not the best way to do it without making your deep research. The only issue that I see in what you're saying is that in order to be able to put yourself in the shoes of the founder, I believe that you should have some sort of experience in building companies, projects, and things like that. Otherwise, it may be very hard for you to do that. At the same time, like you said, if you make a deep check of the team, their concept, idea, their plans, and things like that, maybe you'll have a clear picture of what is in front of the company and if there is a good chance for them to succeed.
No, what you're saying is absolutely true, and that's a beauty of it. So if you go talk to some of the very large family offices, very large investment firms, they clearly say that they don't invest in something that they don't understand. Well, we can all laugh at them for not understanding and jumping onto new technologies, but they are doing good. They are fine with what they're doing. They could be investing in something 20 years old that is pretty old, or there's no technology in it, but their principles are good. They only invest in what they understand. Look at all these blockchain-based businesses. You don't have to have the experience of running a business, but try to understand that particular product. Are you a user of the product, or do you know someone, your friends, people that you come across who might be a user for that? Can you at least think if someone is willing to pay for it, pay and buy it? If the answer is yes, talk to that person. Ask them what they see, because they're a user of a product. They don't need to be running a business for that. It's like a car. So now if you're buying a car, if you're investing into a company that produces a car, then would you buy this car? Would you buy something that's coming like this? Would you buy it at this price point? Or if you don't know, just find someone who would answer that. What is important in a company like this? Why would you buy this, and why would you not buy something that you're already owning right now? Just the right questions. Navigating from a user's perspective would also work. The point is, you can start digging through from any perspective, as a user, as a business owner, as a member of any entity, and any perspective. The question is to start somewhere and dig deep to get to some logic around it, which will give some light into what is existing and what is missing.
Yeah, you're absolutely right about that. I just want to highlight one of the things that you're saying, or maybe formulate it in another way. Yeah. The quality of the questions that you ask regarding a project will somehow define the success of your future investments. So this is what I believe a lot of people are missing. They think that just by checking the website and the white paper is enough. But like you said, first you have to answer a lot of questions by yourself, or by asking the team members if you have this opportunity, or just by Googling all that you can possibly find that can somehow answer your questions. But first, everything starts with the right questions. Except the fact that people are somehow making decisions based on just the website and somehow based on the white paper, what do you think are the other most common mistakes that beginner investors are doing, and how they can overcome them?
I think if all that they can rely on is the website and white paper, there is not much you can do to save them or help them. That there could be third-party platforms who does the due diligence on their behalf and publish reports. They can read that, but then the question comes to whether you trust that platform. So if any bigger VC is investing in a project, some of the times that investment firm does publish a report. Many times it's private, sometimes it's public in certain cases, and those reports are a good summary because they're done a due diligence and they wrote about it. But at the same time, like influencers, there are many entities who get paid for it, and they go ahead and write something nice as well, which happens quite a lot. So it's just more challenging because you don't know whom to trust anymore. Everyone is trying to do good by what makes sense to them, in which case their interest is more in there than the interest of the entire industry or the other people who might come in later. So I don't think I have an easy way or an easy answer for them around it, but because the answer would again be, okay, then you just jump into what looks like a big hype and jump into the website that looks fancy or a white paper that looks neatly formatted, nicely designed, things like that. But that is a shit advice. And if not that advice, I don't know what else to give, but to work hard. I mean, free money or easy money doesn't exist.
I agree that it's not that easy to be actually investor, and there are a lot of mistakes that are possible to happen in this career. So that's why probably one of the good suggestions would be to not start with much and not invest more than you can afford to lose. And you mentioned something very interesting that I suppose a lot of people haven't thought much about, and it is that you can actually pay to a company to write a great report about your ICO that is coming, which can mislead a lot of people. We should be very careful which sources we are using when we are making our decisions. And except trusting such websites, what do you think we should be careful about if
That's very true.
Yeah. What else do you think we should be careful about if you are new to the Web3 investing space?
The whole industry of blockchain is about permissionlessness and trustlessness, right? Which ideally means you shouldn't be just trusting anything that's out there, irrespective of where it comes from and whom it comes from. So be careful about what you read online from whichever entity it is. Be careful about what is said. Verify the facts. Even just like reading a legal agreement. If you need to read through all the clauses, you need to read through what is said. Verify what is said and go through it diligently. And that's the same thing. So we just want a user to not just take anything that is said for granted, but think through it. If someone says they have a big deal with some company, then please check if both the companies have spoken about it in their official platforms, or is there an agreement or something that is uploaded? Is there any conference or event where both of those companies have spoken about it? Is there some public record? Because anybody can say anything, but unless you know the fine print of it, you don't know what it is. Again, it all comes back to research.
Yeah, I think that this is one of the most common words used in crypto, like researching. You always have to do your own research, right? This is the phrase which we hear all the time. When I have been preparing for
even when you say doing a research, do your own research, it's important to know how to research. Researching is a skill. Just like investing, researching is a very important skill. If you want to learn how to lose weight, would you just go and Google and take a YouTuber who is randomly talking about it with randomly talking about something, or would you find an expert who actually understands what it is, who is qualified, who has done it? There is a lot of people who are verified about it, and someone that everyone trusts. So even researching doesn't mean searching for the best advice on blockchain. Well, just a website called bestadviceonblockchain.com would rank first for that, and they could just put all the scams in there, right? So we need to know how to do a Google search. It goes back to more learning, not less.
Yeah, it's also a skill to know how to do a proper research, because I suppose that a lot of people have also researched FTX, but now we see what was the result, right?
Well, I mean, say the FTX is a whole different story, because FTX is not like these other projects which is an outright problem. With FTX, a lot of things were not accessible to common man. It is a regulated company. It is a private company. You don't see what's going on there. It is not like full on-chain data. FTX is a much more complex example, and most people, even if they are good at research, would not have found what is happening there. That is an outright criminal activity, and there's a difference between that and an ICO project who just puts up wrong claims and tries to raise some funds there. It's two different leagues, and I wouldn't really compare both at the same level. And there's a distinction there.
Yeah, I somehow agree with you, but at the same time, we know that it's almost impossible to know everything about the project, about the founders,
exactly,
and things like that. So there is always going to be a risk in investing. But like you said, in FTX, it seems that the risk has been much bigger due to the much more missing information that a normal person, ordinary person, wouldn't have been able to find in internet.
True. Investment comes with a risk at all times.
Absolutely. Risk-reward ratio. So, I was saying, I was going to say that while I have been preparing for the podcast today, and I have been checking all the great references about your articles, your bio, and things like that, I noticed something very interesting which grabbed my attention, and it is that you are practicing Stoicism, right?
Mm-hmm. So I have practiced it in the past, and it's definitely something that's of interest to me.
Yeah, same here. So I don't know if you are prepared to answer this question, but I'll give it a try. So how do you think that Stoicism can help you to become a better crypto investor? Have you thought about that?
Yes. So ideally, some of the things that I learned from that practices is to have patience, is to endure certain pain for a better. It's a delayed gratification, and you also learn how to look beyond just the surface of things. So I'm not only talking about this practice, but there are quite a lot of similar things. I learned similar things even from extreme sports, adventure sports, like paragliding or free diving or things like that. End of the day, it teaches us some base principles which will stop us from making these mistakes of blindly jumping into things, giving into emotions, not wanting to wait for something, or not wanting to put in the effort for a greater gain later. All these mistakes can be avoided. And there are a lot of different practices around the world which can help with it. And this is I just think it's up to the person and what they learn from it. Like they say, whenever you read a book, you learn different things from the book. The next time you read it, you learn completely different set of things based on your current life situation. So when you are in some practices and when you believe in something and when you practice it, you will keep harvesting fruits of that experience consistently only if you look for it. It's not an item in the task list to check, okay, today I did a practice. I followed a couple of principles from this, but it's about going ahead and retrospectively looking at what you learned, what this practice teaches you, how does it apply in your life, and what can you do with it? The right questions and right introspection.
Yeah, we are again back to the idea that you need to ask the right questions. Before we finish, I want to ask you one more thing, which I suppose a lot of people are asking themselves, because there is also a lot of negativity going around crypto. So what actually makes you think that the future of crypto is bright?
What I see. I was in Jordan in the first week of November, speaking with the prime minister and the ministers there in Jordan and Sudan and Palestine and few other countries in the economic conference that they had there. I could see how, irrespective of what's happening here, irrespective of the fact that they might not necessarily like the cryptocurrencies like all other countries out there, they still understand the power of blockchain as a technology. When I go to corporates and enterprises and speak to them, very large companies, maybe they are in the space from 20 to 100 years, very old and established companies, they understand that blockchain as a technology can help them. When we speak to bankers in the past, they used to just say, this is a scam. But right now, many bankers are able to differentiate and say, we don't like cryptocurrencies, but we like blockchain. We see how blockchain can make our lives better, how it can increase our productivity, and how it can reduce our cost. They are able to see it and they're able to use it. There are companies spending millions of dollars privately creating and investing their business processes and developing something in the blockchain technology that aids them. This is happening right now. It's happening when the whole industry is in turmoil. And when I'm with these people, I don't hear them talk about FTX. I don't hear them talk about these problems because they don't care. How does this affect a blockchain? It doesn't.
You're absolutely right, my friend. People don't make the distinction between cryptocurrencies and blockchain. There is an issue with crypto. They tend to think that this is going to kill the blockchain. But in the end, actually, cryptocurrencies are living on the blockchain. It's not the other way around. Even if someone kills cryptocurrencies, all cryptocurrencies, in the end, will still have the blockchain.
And this is something that I tell someone who's always coming to me. In our fund, our incubator, we look at companies and incubate them that we believe in for many years. And they ask, what is the one principle that you use to choose a company to incubate? And I just use a simple evaluation technique. I call it a Bitcoin zero evaluation. If Bitcoin were to go to zero right now, can this business still earn money, sustain itself, and grow? Is that token have any value when Bitcoin is at zero? If the answer to that is yes, if as a user, someone is still willing to pay for a token and buy a product or service from a website when the whole speculation game is done, gone, thrown out of the window, when Bitcoin doesn't exist anymore, then that is a business that I like to incubate. That is a business that we like to work with. And that's a business that we want to build. If not, sorry, this is not fitting into our model of how we look at the world of blockchain.
Perfect. I think that great end for our conversation. I think that if people start thinking the way you think about the projects that we're going to incubate, and they use this information when they're deciding if they should invest on something or not, but they have to do the proper research in order to answer the questions that you just mentioned. Somehow maybe they look very simple for answering, but in the end, it's not that case. Thank you very much, Mr. Key, for being part of the episode. I think that it was an amazing conversation.
Sure thing. Likewise. Thank you so much.
Amazing. So if you want, can you share where people can find out more about you and your projects?
Sure thing. Just check out my LinkedIn. I would drop the links for you in the description as well. It has access to all my companies. Check out forwardprotocol.io, keydifferencemedia.com for the incubator, and utopian.capital for our fund. All the information is available there. You can follow me on Twitter, Instagram, LinkedIn, and you would know everything that's ongoing.
Perfect. So thank you very much, Mr. Key, for being here. It was an amazing pleasure to talk with you. And thank you very much to all of our listeners that have been listening to this episode so far. Thank you very much. I truly appreciate you. And if you want to help the podcast to grow, share it with your friends, share it with everyone that you know, because this is the way to spread this valuable information, which amazing and valuable guests like Mr. Key are sharing with us. So thank you very much again, Mr. Key. Thank you very much to all listeners. I'm Power, the CMO of Seasonal Tokens, and I'll see you on the next episode.